Hi, welcome back to the channel. In today's episode, I want to talk to you about what's happening in the Russian economy and specifically to talk about the Russian ruble. Now, when we're talking about currency, the old adage is that if your economy is doing well, then your currency is doing well. That basically goes hand in hand. That's the way things used to be. And if we have a look at what's been happening with the Russian ruble over the past 12 months, you can see that it's strengthened significantly against the US dollar. A year ago, one US dollar was trading for around 98 Russian rubles. Today, it's trading for around 77. So, based on that analysis and the old adage, you would assume that the Russian economy is doing really well. But there are a number of different factors when you're looking at exchange rates. Usually, the best way of looking at exchange rates is if it's a free market float. So, the US dollar is a good example of that. When there's strong demand for the dollar, then the value of the dollar goes up because, like any supply and demand, if you've got an increase in demand, then it pushes up the price, and the price of a currency is basically its valuation. But if the opposite is occurring, if there's not as much demand for the US dollar, then the value goes down. So when you look at the Russian ruble, you would think that the demand for the Russian ruble is going up at the moment because the value of the ruble is going up, but that isn't the situation. If you've been following the channel, you'll be fully aware that there are not many countries around the world who are interested in dealing in rubles. In fact, there's only really one, Russia. Its biggest trading partners, China and India, well, India at the moment, but potentially India might not be a major trading partner for Russia in the near future if it complies with the agreement not to buy Russian oil that it signed recently with the US in terms of getting its trade tariffs down to 18%. But both of those countries have refused to deal in rubles. So China will only deal in Chinese yuan, and India is dealing in a combination of other currencies because it just didn't want to have to deal with rubles. So, what's going on with the ruble, and what's the implications of this for the Russian economy? Well, interestingly, the strength of the Russian ruble is actually really bad news for Russia at the moment. And the reason why the ruble is currently trading where it is because it's now a managed currency. So the Russian central bank is managing that exchange rate. If we have a look at what's happened over the past 5 years, you can see that immediately following the invasion of Ukraine, the value of the ruble crashed. At one point, it was trading over 120 to one US dollar. The Russian central bank then stepped in, started basically buying rubles in the market, and it increased the value of the ruble to around 50 to one US dollar, which was the highest it'd been trading at for many years. We then saw a relaxation of those controls from the Russian central bank, and the value of the ruble actually fell to around 110 by the start of 2025. That wasn't palatable for Vladimir Putin. He basically said, I want the ruble to be doing a better job. I want it to be strong. I don't want it at these levels. So the Russian central bank has been forced to push the value back up. Now, you might be thinking, does it really matter what the value of the ruble is? Does that have any bearing on anything? Well, it does. It has a really big implication for inflation. So if we have a look at what's been happening with inflation over the past 5 years, if you've been following the channel, you'll know that this is the recurring theme. Russia has been suffering extremely high rates of inflation, and this has a really damaging impact on the value of your currency, usually because it erodes the purchasing power. So, inflation has been high, and Russia has been wanting to get it down. Now, Russia is importing a lot of really important things like food and other things that it can't produce. So the purchasing power of the ruble is actually quite important. So when your currency is strong, it means that you've got more purchasing power in the international markets. So that actually should be bringing inflation down. Well, it would do if anybody was accepting rubles as a form of payment, but they're not. So the other way of handling inflation is obviously interest rates. And you can see that over the past 5 years, Russia has been increasing its interest rates. And currently they're sitting at around 16%, which is one of the highest levels in the world. Now, that has had a positive impact on inflation. Inflation is now coming down over the past 7 or 8 months. We've seen a gradual reduction in inflation. It's still at a high level, 5.6%, but it's closer to 4% than it was 12 months ago. But the reason I wanted to make this video was really to talk about the impact of the strong ruble. Russia may want to have its ruble trading at a high level for sort of show purposes in the international markets to say, aren't we doing well? The ruble's very strong, therefore, that must mean that the Russian economy is doing well. But this is actually having a disastrous impact on both the results of Russian companies and also the level of tax that they're now paying and contributing to the Russian economy. So I wanted to just run through this example, which puts into perspective why a strong ruble is not good news for Russia. So if we assume that a Russian business is receiving $1 billion worth of revenue, let's assume that it's for the sale of oil, which is probably the best chance that any company in Russia's got of earning $1 billion. So 12 months ago, $1 billion. Today, $1 billion. So the US dollar income is exactly the same. And the reason why it's important when we're talking about oil and gas is that nobody's paying for Russian oil and gas in rubles. They're paying for it in things like US dollars or euros or Chinese yuan or any other currency apart from rubles. So if that company was receiving the same amount of income today as it was last year, let's look at the implication of the movement in the exchange rate of the Russian ruble. So a year ago, one US dollar was trading for 98 rubles. So that means that the $1 billion of revenue that it received in the international markets, when it converts it back into rubles for its bookkeeping purposes, that's what all Russian companies have to do. They have to report all of their results in rubles because Russia wants to keep the ruble alive. So every Russian company is benchmarked in rubles. So a year ago, $1 billion worth of oil revenue would have equated to 98 billion rubles. That's what that company would have put through its books. Today, because the exchange rate is down to 77, it would only show 77 billion rubles. So for the same amount of US dollar income, that Russian company is showing a 21 billion ruble fall in income. So that's a 21.4% fall in its total income, despite the fact that its international income was exactly the same. It's still being paid $1 billion. But because it's converting at a much stronger rate for the ruble, it's showing a lower value of rubles through its book. So a 21% fall in revenue just because of the exchange rate. Now, you might be thinking, well, that doesn't matter. Who cares? Who cares what the Russian ruble equivalent is? It's still $1 billion worth of revenue. But the people who care the most are the Russian economy. So the Kremlin is losing here. So if we assume a profit margin for that company of 30%, so its net profit is 30%, a year ago, the 98 billion rubles at 30% profit would have made 29.4 billion rubles of profit. Today, at 77 exchange rate, then it's only got 77 billion rubles of income. 30% profit on that is 23.1 rubles. So we're seeing a 6.3 billion fall in profits. Now, this is where it starts to hurt the Russian economy. You pay 20% tax on your profits. You don't pay it on your US dollar equivalent income. You pay it on your Russian ruble profit. So a year ago, 29.4 billion rubles of profit, 20% tax, that would have been a contribution to the Russian economy of 5.9 billion rubles. Very nice too. Today, exactly the same amount of oil sold, exactly the same amount of US dollar revenue, but because the exchange rate is now 77, the company is reporting 23.1 billion rubles of profit. So 20% tax on that is only 4.6 billion. So the Russian economy has lost 1.26 billion rubles of tax revenue that it would have had when the exchange rate was back up at 98. So that represents more than a 21% fall in tax revenues from Russia's perspective, just because the exchange rate is now at 77 rather than 98. So obviously, this example does not take any account of the sanctions and the fact that India has now said that it doesn't want to buy Russian oil, and the fact that Russia is really struggling to persuade China to continue buying oil because of the risk of secondary sanctions. So all of those other issues are on top of this factor. But I wanted to make this video really to talk about the impact of the exchange rate on Russian companies and also, therefore, the Russian economy. Because as the ruble gets stronger, it means that all of these companies are reporting lower ruble figures. That's basic maths. That's the way it works. So if your currency goes up in value, then you report relatively lower amounts of cash in rubles through your accounts. Therefore, you report lower amounts of tax, and therefore you pay a lower amount of tax. So bizarrely, even though the old adage says that a strong currency means you've got a strong economy and therefore it's a good thing, that's what people assume, it's a good thing. It isn't really a good thing if you're a net exporter, because you're reporting all of your results back into your home currency. And that's what's happening for these businesses. So just wanted to point this out to you, because there's a lot of sentiment out there. I get a lot of messages from people saying the Russian ruble is doing really well, therefore that tells us that Russia is actually doing really well. Well, it isn't, because the ruble isn't a free currency. It's not floating at the moment. It's not just coming in at market equilibrium to tell us what the value of the ruble is. The Russian central bank is manipulating the value of the ruble for its own purposes. Now, why it would do it at such a good level, it is bizarre to me. It doesn't really make a lot of sense, apart from the fact that the Kremlin clearly has instructed the Russian central bank to keep it at a certain level. So it probably wants to do it because it's seen to be a good thing to say, well, the ruble's trading at very high rates, therefore that proves that we're doing really well. Well, it doesn't prove that at all, because firstly, nobody's trading in rubles, so there isn't normal demand for the ruble. And secondly, it's really bad news when you're looking at the tax implications. And therefore, this high value of the ruble will start to deteriorate the value of the Russian economy. We're going to see negative implications if the ruble stays at this level going forward, because all Russian companies will pay less tax. They would be better off moving the ruble back to around 100 to $1. A lot of businesses in Russia have actually stated that they would prefer to see that. Now, in terms of the purchasing power for imports, a strong ruble would be beneficial if anybody was accepting payments in rubles. But as I've said on multiple occasions in this video, they're not. So having a strong ruble doesn't actually have any benefit whatsoever from Russia's point of view, apart from the bragging rights to sort of show off and say, aren't we doing really well? Well, unfortunately, as we've seen in this episode, the fact that your ruble is trading strongly actually means you're doing worse than you would have done if the ruble was weaker. So hopefully you've enjoyed today's video, you found it useful, informative, and most importantly, thought-provoking, because I'm trying to get you to think in different ways. And I think it's easy for something like a currency to just assume strong currency is good news for every economy in the world. It isn't actually. It's not good news for Russia at the moment, and it won't be as long as the war in Ukraine continues and the sanctions are applied against Russian oil and gas. These companies are struggling anyway to find buyers, and the fact that the ruble value is also hurting them is just another factor that's applying even more pressure to these companies. So if you've liked what I've said today, then please give me a thumbs up. Please subscribe to the channel if you haven't done so already. Don't forget, I'm currently running my competition whereby you can win my property located close to one of the best beaches in the UK, or £250,000 in cash. But I need to sell some tickets in order to be able to deliver that prize. So have a look at the QR code on the screen now, or click the link in the description below if you'd like to support the channel in that way. Hopefully it's a bit of fun. Thank you so much to everyone that's supported me in other ways. If you've bought me a coffee or sent me YouTube super thanks or signed up as a patron or a member, really appreciate that support. Thank you so much. And here's something to put a smile on your face.